Buyer type number one, an investor. You're an investor and your main focus is income. So when I mean income, this is income minus expense. So your major concerns are the rent you're receiving and the body corporate fees and the rates and any other outgoings. Now, if this is what your aim is, where capital gain isn't as much as a focus, then generally you're looking at smaller apartments, and you're going to be looking in most cases below 50 square meters. Yes, there are some odd cases where you'll have a large apartment with a lot of rooms in them, but it's often harder to find tenants because you're going to have multi-tenancies or find a group of tenants that all want to live together. So generally speaking, you can say your criteria is below 50 square meters, and ideally the highest return is below 40 square meters. The reason for this is because of bank lending. There are two major banks that will lend at 80% on apartments of 40 square meters and above. All the rest are a lot higher. So if you're below 40 square meters, that takes out all the owner-occupiers, because that low demographic who are buying to live can't afford it. So that means most of the owners of those apartments are investors. So the numbers, the apartments haven't risen emotionally, if you know what I mean. An emotional purchaser is what pushes the prices up. And so you'll be looking at stock below 40 square meters, but you'll be looking at doing about a 50% deposit. So I'll give you a bit of a story. This is what I did for my parents. So my parents had a house, or one of their houses. It was $700,000 approximately, and Dad was renting it out per room, getting a reasonable income. He was getting about $1,000 a week rent. Yet the return was horrible. And I said, Dad, what are you doing? Sell. If you're not concerned, I mean, that's 60 odd. He's not concerned about capital gain. The only person who's going to benefit from capital gain is me. And I'm not looking for that. I mean, he's fit as a fiddle anyway. And so I said, Dad, sell them. We'll go and buy some apartments. We'll get 3 apartments and we'll rent them all out. And I guarantee I'll double your income or your net return. And that's what we did. We went and bought 3 apartments for about $200,000, finished them all and rented it. And now he's getting double the income. And he's over the moon. And the great thing is he's now got 6 that are freehold just for income, and that's his retirement paid for. And every time he wants an injection of cash, he just sells one of them, because all his eggs are in one basket, like in a commercial type arrangement where you've got one large property with a great return, but you've got to find that tenant. So yeah, that's one type of buyer. So just to, I suppose, recap on that, you should be looking for stuff that's small with reasonably low body corporate fees. You should be looking to long-term maintenance plan and location. Car parks are something that are not necessary, because so you're looking generally in the middle of the CBD. What a car park does is lower your return level because you pay a high body corporate fee and you don't get a very good return for the added cost of the car park. And so yeah, that now is your criteria. Now the next one I'm going to be talking about is, yes, you're an investor, but you're probably a bit younger in most cases, and your main concern is capital gain, with income being secondary. Cheers.